Hi everyone, Melinda Jennison here from Streamline Property Buyers. Today I'm walking you through our Brisbane market update for January 2026, and I want to start by saying this. January is usually meant to be the quieter month. Sales volumes are often lighter, many people are still in holiday mode, and the market can feel like it's idling until February. But Brisbane didn't follow that script this year. In the next 10 minutes or so, I'm going to unpack what's been happening with supply, demand, price growth across houses and units, and what it all means if you're looking to buy in Brisbane in 2026. Particularly if you're watching Brisbane from Sydney or Melbourne and assuming that it behaves the same way, because it doesn't. All right, let's get into it. The first thing I want you to pay attention to is listings. Total listings in Brisbane are down year on year, and in a market like Brisbane, that matters more than almost any headline that you'll read. When supply stays tight like it is right now, competition doesn't need much encouragement. Buyers feel it immediately. There's fewer quality options, there's more urgency, and there's less negotiating power. And that's especially true for A-grade homes in owner-occupier locations where demand tends to be deeper and more emotionally driven. Now, interestingly, even though demand feels strong, sales volumes have actually decreased a little over the last 12 months. That doesn't automatically mean demand is falling away. In Brisbane, a drop in sales volumes can simply mean there's not enough stock for buyers to transact on. So rather than a market that's cooling, it can be a market where buyers are active, but they're missing out because they're waiting for the right listing or they're struggling to secure quality. Low stock can cap the number of transactions even when buyer interest is really high. And if you want the clearest sign that demand hasn't gone anywhere, you can look at some of the demand indicators. Clearance rates at the end of January were solid, and Brisbane's days on market is sitting at around 18 days. That's fast. It's faster than 12 months ago when the average days on market was 20 days. Remember, this is not necessarily days to enter a contract, it's typically days to become unconditional. This tells us that well-priced, well-located property is being absorbed quickly. And in this environment, speed isn't about rushing, it's about being prepared. Because good homes don't sit around while buyers take a few weeks to decide. That's not the case in Brisbane. Now, when demand stays firm and supply stays constrained, values tend to keep moving upward. Cotality's January data shows Brisbane dwelling values were up 1.6% in January for the month, 5.1% over the quarter, and 15.7% over the year. That takes Brisbane's median value to around $1,054,000. That's not the kind of start that you see in a market that's cooling off. And this is one of the key differences with Brisbane compared to Sydney and Melbourne. Brisbane can continue to increase even higher in value when transaction volumes soften simply because supply is the constraint. And I always like to cross-check the story using different data sets. PropTrack uses a different methodology, but the direction of travel in prices is consistent. Brisbane is still recording growth according to PropTrack. And when multiple data sources broadly agree, I pay attention because it's not just noise, it's a trend. Now, this next slide is important because it shows where growth is concentrating. This breaks down growth into different market segments, essentially different price points across the market. Brisbane's growth has been led by the more affordable segments, like many other markets. And that makes sense because affordability pressure pushes demand into the lower and the middle parts of the market first. But what is interesting right now is that growth is starting to broaden here in Brisbane. And when growth starts spreading into the middle and higher price points, it can be a sign that the cycle has more depth. Now let's split it into houses and units because they are behaving slightly differently. Brisbane house values were up 1.5% for the month, 4.9% for the quarter, and 15.1% over the year. The house median value shown here is around $1,149,000. Detached housing remains the family battleground, and that's exactly what supports pricing. When owner-occupiers compete, they don't just compete on numbers, they compete on emotions, on lifestyle, school options, commute times, and long-term plans. This, of course, creates resilience in the housing market here in Brisbane. Again, PropTrack shows a similar story for houses, and if you're relocating or investing from interstate, this is where people are often misreading Brisbane. They assume Brisbane is simply following behind Sydney and Melbourne, and that Brisbane will cool down when those cities detract in value. But Brisbane's supply dynamics and the buyer pool are different, and that's why the market can behave differently. For buyers in this segment, preparation matters and speed matters, and of course, clarity of brief matters. Now let's talk units, because this has been one of the most interesting parts of Brisbane's market. Brisbane unit values are up 2% for the month, 6.1% for the quarter, and 18.3% annually. The unit median shown here is around $824,000. Units are currently outperforming houses, and that's driven by affordability and increasingly investor and first home buyer activity. When house prices move further out of reach, demand naturally compresses into the attached housing sector. PropTrack also confirms the same trend in units, but I do want to add an important caution here, because not all units are the same. The fundamentals do matter more than ever. Obviously, there's changes in building quality, body corporate positions, the supply pipeline of nearby development, the aspect, the layout, the long-term appeal to owner-occupiers. These things absolutely should be considered. There are brilliant unit opportunities in Brisbane, and there's also buildings that I wouldn't touch, regardless of what the broader market is doing. So the headline growth is helpful, but it's not the whole story. This chart shows the month-to-month rhythm for houses versus units, and you can see units lifting again recently. When units outperform, it usually reflects affordability pressure, as I mentioned previously, and a broader buyer pool chasing value. It also tells us that demand is not narrow. It's spreading across different buyer types and across different budgets. Here we have median houses versus median unit values over time. Houses are still more expensive, but units have been following a similar trend. But as I keep saying, you don't buy a unit or a house, you buy the right unit in the right location, in the right building, or you buy the right house in the right suburb with the right owner-occupier fundamentals. Because the market tailwind doesn't fix poor fundamentals. Now we zoom out a little and we compare the capital city market performance across Australia. This slide looks at the 12-month picture for houses versus units across the country. Brisbane does stand out as one of the markets where unit performance has been stronger. Overall, the performance in Brisbane, Perth and Darwin has been the strongest over the last 12 months. And if you're an investor, it is important that you weigh up yield, affordability and scarcity, not just growth headlines like this from the last 12-month period. Because recent growth without the right ongoing fundamentals can cause an asset to stagnate in value or even decline in the future. This slide shows the 3-month picture. Of course, short-term price movements matter because it tells you what's happening right now and not just historically what might have happened over the previous 12 months. Here, Brisbane and Perth remain the outperformers, but it is clear that the Darwin market has fallen away in terms of growth. It's cooling down. And whilst units in Darwin are still performing well, in markets where both units and houses are moving, it suggests the market is not relying on one segment alone to drag it forward. Now let's shift to the rental market here in Brisbane. Vacancy remains tight and it hasn't materially improved except for short seasonal changes that are common over the Christmas period. So this continues to put pressure on rents and it supports investor demand, especially for properties that remain affordable to hold. For tenants, it is still a difficult environment. For property investors, it provides support, but again, you still need to buy smart because holding costs, maintenance and potential interest rate rises matter. And we can see rental price growth lifting again throughout Greater Brisbane. Brisbane is sitting at 6.3% annual growth for house rents and 6.8% annual growth for unit rents. For property investors, rental growth supports serviceability and investor confidence, but that feeds back into buyer competition because it's all connected. So if I summarise Brisbane in January 2026, it looks like this. Buyer activity came out of the gate early, especially in affordable and mid-range markets. Listing volumes remain tight and that keeps competition alive. The lower quartile has led growth, but the uplift is starting to broaden. Units are still outperforming, driven by affordability and property investors and first-time buyers. The rental market remains tight, with rental growth still running at around 6 to 7%. In plain English, supply is still the constraint, and that's why the market continues to increase in value. If you are buying in Brisbane this year and you want a clear strategy, not just the hype, you can scan the QR code on screen and connect with our team at Streamline Property Buyers. We focus on A-grade fundamentals, thorough due diligence, and negotiating in fast-moving conditions so that our clients make confident and informed decisions. Thank you for watching, and I'll be back next month with another market update. Until then, bye for now.